I'm Jeff Cornwall, and this is the Entrepreneurial Mind. Today our guest is Phil Shmerling. We'll be back to talk with Phil after these words from our sponsors.
Talkopolis, the social media TV network for your city.
Welcome back. So Phil, I met you a few years ago, and you were in one of my seminars, and you were quite excited about something new coming on the forefront in terms of investing. Talk a little bit about kind of what sparked your interest in all of the crowdfunding scene, and particularly the Jobs Act, and what did you see early on as your vision for this company you wanted to create?
Sure. Well, crowdfunding for me has always been an interest because I've always been somebody who's been interested in investing in startups myself. But I was never accredited, and I knew that not being an accredited investor, I couldn't invest in startups. So you had sites like Kickstarter, Indiegogo, that were allowing people to invest in startups or contribute to startups, but for a product, not for an investment.
Now, a lot of people probably don't know exactly what an accredited investor means.
Sure.
So define that just a little bit for us.
So an accredited investor, it's a legal definition that only has to do with somebody's net worth or income. It's not that they've taken a test and they know what they're doing.
Right.
So they either have to have a net worth of $1 million, not including their primary residence, or they make $200,000 per year in each of the past 2 years with an expectation to earn it again this year. So if you're not accredited, it was hard to invest in startup companies. And conversation started around Congress about legalizing sites like Kickstarter. And that would allow entrepreneurs to be able to go out and raise money from an unlimited number of non-accredited investors for raises under $1 million.
Because that was kind of what was going on at Kickstarter anyway at that point in time.
That's right.
We saw a lot of small businesses going there and getting donations to come in and help them get started.
Right, but they couldn't get a financial incentive,
Right.
the donators.
Right.
So Congress said, well, companies are having difficult raising money, especially startups. Banks are tightening lending, so maybe we should look into legalizing this and allow entrepreneurs to do two things that were previously illegal. One being that you could solicit to non-accredited investors, and you could solicit to the general public. But in order to solicit to the general public through Title III of the Jobs Act, which is the crowdfunding piece, you have to go through a registered portal. So
at first we thought this was going to be great. It's going to be the Wild West of investing, and it's going to be finally open up investing in small businesses to the masses. And we all had visions of a really cool thing, but they kind of took a little different turn on us, didn't they?
Yeah, so the government was, the Securities Exchange Commission was supposed to write laws that were due January this year,
Right.
2013. They missed the deadline, obviously, and we are still waiting for the laws. We're expecting maybe early 2014, maybe sometime in the first quarter.
And I'm assuming the longer they take, the more complicated they're going to be.
Probably.
Right.
But they have a lot of things to figure out. They have to regulate what's good for investors, what's good for entrepreneurs, and what's required of the portals like InCrowd. So in waiting for these laws, we've had to find some creative ways to make money, and we've made a pivot towards only allowing accredited investors to invest in startups, which is a pivot I think a lot of people are making right now.
Now, you started InCrowd, what, a year and a half ago?
A year and a half ago,
officially?
And full-time for a year now, a little over a year, maybe a year and 2 months now.
And so, you're sitting there twiddling your thumbs going, when are the rules coming?
Right.
And we don't know. So now you've done this pivot, and what does InCrowd look like now?
So now it looks like I've made a major pivot, but for me, and I think for a lot of entrepreneurs that go through a similar scenario where they've had to change ideas, it's been more like 900 small iterations that have led to a major pivot. And we've tried, again, 900 different models, 900 different ways to try and make money.
I think I've seen 800 of them already.
You've seen 899 of
Yeah.
them. And we finally got one that people we're getting really good feedback on and people are signing up for. So we launched 2 weeks ago. It's an angel network. We still are very heavily online. People can get information online, and we still use an aspect of a wisdom of the crowd, allowing angels to score the companies based on 13 categories that we interview the companies on and post as information online.
Now, have you had to take steps to verify that these people really are accredited investors? Because in many situations, it's kind of on the honor system. I mean, if you're dealing with kind of a random deal out there, I had an angel come into my company. I never made him officially verify. Do you have to take that step?
Right now, it's mostly self-certification, but the people who we've met with so far are mostly people I know through my network. So I know that they're accredited, whether it be through investments they've made in the past or their interaction with places like the National Entrepreneur Center and other angel groups. But eventually, with Title II of the Jobs Act, if we want to get into more general solicitation pieces, then we will be verifying through methods that the SEC requires, so that entrepreneurs who are raising money don't have to.
And that section of the code is going to allow people with lower incomes and lower net worth to invest to a certain threshold based on their income and wealth. Is that correct?
Title III allows anybody to invest.
Right.
Title II, you can solicit to the general public, and you don't have to use a portal like InCrowd. You can do on your website, you can send flyers, you could do a billboard if you wanted. But if you do that, you have to take extra steps as an entrepreneur to make sure that the angels are in fact accredited.
Okay.
So we just make it much easier.
That's still accredited investors.
Still accredited investors.
So which is the section that deals with those who are not accredited?
Non-accredited is Title III. That's the crowdfunding piece. And those are the laws we're still waiting on.
All right.
Title II passed about 3 weeks ago in late September, and that allows entrepreneurs to advertise to the general public now, but they can only take money from accredited investors.
Now, do you think you'll get involved with what happens when Title III finally gets launched?
Yeah.
Is that your plan?
Yeah, we see crowdfunding fitting into our model, kind of like if you can picture a funnel. We think crowdfunding, the most beneficial for entrepreneurs, is that early stage friends and family round, that $30,000 or $50,000 they need to build a prototype, to build some momentum, get some early customers, and validate the market. And then from there, we take them to our angel group, which we launched 2 weeks ago. So the companies that are performing well go into this funnel, they do well in crowdfunding, we watch them for a little while, and then they're ready to raise angel money,
and you'll
they're vetted.
Really watch them. I mean, you'll have proof of concept internally in your system that way, which is a huge advantage to angels because they really don't have that close of babysitting sometimes in terms of the early stage of the deal.
Yeah, so the angels are going to see these vetted deals that we've been watching over time, and we only work with companies that go through accelerator or university programs. And that's one of our key niches.
Right.
So that you know where the companies are coming from. It's not your cousin in Texas who has a buddy who has a good idea.
Right.
You know, these are going through training programs. The companies are screened to get into the programs to begin with. So you're already seeing a higher quality company, and then they're getting vetted even further while we're keeping an eye on them to see how they are doing in terms of execution and validating that early market before we show them to an angel. And that's how the crowdfunding will really fit into our existing model now.
Well, as someone who has spent a lot of time watching you on this journey, I'm proud of where you've gotten to, and I'd love to have you come back in a little while and share kind of your progress, especially as the crowdfunding broadens in the near future, we hope. So
We'd
thanks,
love
Phil.
to do it.
Appreciate it very much.
Thanks for having me.
All right.